0.33%. We're now shifting focus to Tata Steel, and joining us to reflect on the outlook of Tata Steel in FY18, Vishal Kulkarni, Associate Director at S&P Global, joins us on the phone line from Singapore. Mr. Kulkarni, good afternoon. Many thanks for joining us on NDTV. There's been an improvement in the profitability of Tata Steel, but what are some of the points, watch points in the months ahead, according to S&P?
Good afternoon, Manvi, and glad to be on the show. Yes, the results of Tata Steel for the last quarter show an improvement from the quarter before or the year before as well. And that's in line with our expectation for the BB- level of rating with a stable outlook. Going forward, I think key for us to see the maintenance of such good performance in the India operations. So our expectation is the India profitability should be about at least 10,000 rupees per ton. Good volume growth coming from its Odisha new plant, Odisha operations. And the key one, the third key and probably the most important is how and when the restructuring at the Europe operation gets completed, coming from the pension scheme restructuring and then moving on to the proposed joint ventures with some of the other European steel makers. And that's really the key factor for us to look out when we look for the improvement in leverage, improvement in overall operating performance over FY18.
Okay, so let's look at, what explains the improvement in the performance of Tata Steel in the quarter that's just been reported. I mean, how do you break down the improvement in performance? And then we'll talk in much greater detail about the scenario as far as UK is concerned.
Sure. So coming to the India performance, one must keep in mind the improvement is coming from relatively weak levels. Especially if I look at the last year, the performance was affected because of the imports, generally low steel prices globally, and relatively weak sentiment in demand in domestic market. Year forward, this quarter, the December quarter last in FY17, has seen improvement on multiple fronts. One, the global demand seems to have stabilized and improved overall. The steel prices, if I see, have improved by 50 to 70% in domestic market, again driven from the global price improvement, especially from China, where the stimulus has helped the property market overall. So the price improvement has been phenomenal in that sense. Overall sentiment and demand seems to be better as well, both globally and domestically, again driven by multiple factors, Trump factor, China stimulus factor. So I would say both demand and prices have been fairly good. Looking at Tata Steel, which is an integrated player, which has its own sources of iron ore and coal, gets benefit of such high steel prices because their cost remains fairly stable, and hence the profitability improvement is an outcome of such development, I would say.
Any headwinds you foresee when it comes to the India outlook?
I think for this quarter, at least, what we can think of is some of the headwinds coming from the demonetization impact, where we have seen a slowdown in overall construction activity, and hence there should be some headwinds in this quarter and probably going into the next quarter. But then again, the steel prices have remained fairly stable and have shown improving trend going into this current quarter. As I said, the cost remains fairly stable. So as long as the offtake remains healthy, I wouldn't say the headwinds will be that much, and hence the profitability and overall cash flow generation should be stable to improving in this quarter. Again, as I said, going into the next quarter, how the demand copes up, whether the China stimulus support goes away, or the improvement in prices that we have seen over the last 1 year doesn't stay and some weakness in prices follows, then those could be the things that might impact the profitability. But otherwise, it doesn't seem to have any key headwinds which could impact the profitability or performance in a secular manner.
Okay, now it brings us to Europe, UK, and what you're tracking as far as the restructuring is concerned. I mean, you know, the broad approach we've been tracking, whether it's asset sales, whether it's the pension scheme overhaul, whether it's joint ventures, but the S&P perspective on all of these fronts, what are you mapping, what are you tracking?
So I think clearly, if I see Europe, there are certain assets which are not so much profit-making, certain assets are good profit-making, and what we have seen is companies' efforts are to reduce the loss-making or the low profit-making operations. So that's one of the factors that we have looked at. The company has reduced some of the loss-making assets, sold rather some of the loss-making assets, and hence we have seen some improvement in their Europe profitability. So that's first step. Second step, what we are looking at is the pension restructuring. Recently, the UK pension scheme was approved by the voters, by the workers, to change in that pension scheme. Remaining some of the approvals, like regulators and trustees, are still pending. But once that restructuring gets over, I think it kind of gives them additional support for any type of joint ventures they want to do with other steel makers in Europe. So putting this together, what we really need to see going forward is, as and when this pension scheme is over, whether there are any liabilities that are accrued to, or any financial liabilities that Tata Steel needs to take care of once the pension restructuring is over, and any contours of a deal for a joint venture with other steel makers. What does it mean for the debt at the Europe entity level? After such restructuring, what kind of efficiencies and improvements and hence benefits to the profitability or cash flows comes in? So that's something is still obviously very unclear, very early stages of development, and those details, as and when clear, should give us more color on how the Europe performance overall will be going forward. Just to give a indication, Europe has been very volatile in terms of profitability. They can swing from a negative EBITDA to positive EBITDA in a quarter, depending on the raw material prices and currency fluctuations. So in itself, the operating performance, operating efficiencies are relatively weak. But if the pension scheme restructuring goes ahead, the joint venture goes ahead, the debt load comes down, we could see some more stability in the cash flow generation at the Europe entity level, and that would be beneficial to overall group rating, Tata Steel group rating, because we are coming from a very high leverage, low cash flow generation last year, and relatively volatile profitability at the Europe operations.
Vishal Kulkarni, thank you for that comprehensive overview of Tata Steel performance to date and what's going to shape the outlook that S&P has going forward. Appreciate your time here on NDTV. Many thanks.
Thanks, Manvi.
Thank you. Well, we're going to turn our attention now back to the markets, and a couple of stocks which are figuring on the brokerage watch list. I'm going to start with IndusInd Bank, and more